morning, good afternoon, good evening, traders from across the globe, and welcome to the 1,900 and double nickel, that would be 55 to you non-floor traders, edition of Short-Term Trading Live with Oscar. Hey traders, what's going on? I love doing these videos. The analysis I'm about to show you is some of my favorite analysis to do on markets because you can't get it wrong unless you're really stupid. I'll show you what I mean. So the analysis I'm about to show you is simple for figuring out what we should do in gold for trading on Fed Day number 2. What does gold do on FOMC or Fed Day 2, the announcement day? How should we approach gold on Fed days? Traders, you know this is risky, right? So risk. You know how that works. If you do something wrong, you can be hung. Use your stops, put them in first. Know you can lose more than what you have in your trading account. And then we'll talk about how we're going to handle gold. So, for trading on June 19th, which is the second day of a 2-day Fed meeting, or FOMC meeting, the Federal Open Market Committee, as you older timers would know it. They're going to come out and make an announcement about rate hike, rate lowering, rate doing nothing. Jerome Powell, as I threatened your job yesterday with me taking it, sir, don't touch the rates, please. Leave them alone. This isn't a moment to mess with rates. Empty your balance sheets as quickly as humanly possible, but leave the rate alone. And I think you know that because you've been a fantastic governor so far. Chairman, I think he's been a great chairman. I'm not busted on him at all. But if he touches rates, I want his job because I'll show him how to do it better. So please don't touch rates. Barring that, if you like the video, if you like the analysis that you will see in this video in a moment, and I assure you it's going to be exciting, make sure you subscribe to my videos, but don't just subscribe, then hit the little alert button, get the alerts so that you know when I'm putting out a video, if I'm going to do a YouTube Live, if I'm going to do a nightly video. They're always important, and it's always about what should happen in the markets going forward. So make sure you subscribe to these YouTube videos, and hit that little alert button so that you'll be notified. I'd like for you to share them all over the internet, like them on Facebook. Please make sure this name gets out. I'd like to help as many people as I can, and only you can help me do that. So please share, like these videos. Make sure that you at least, if nothing else, subscribe to them, okay? So, what will gold do on Fed Day? I'm going to get right to it. I've got a bunch of charts to show you, and here's what I will say. I've done the analysis for us, kids. You know me. It's what you guys love about me. I went all the way back to 2015, all the way to 2019. What happens on Fed days to gold? So I did the research, and I'm about to show that research to you. With no further ado, let's go look at some charts. Traders, this is gold daily bar chart, and each one of these arrows represents Fed Day or FOMC Day and what the market did on the second day, Fed Day announcement day. So you see this chart? Don't worry about it. We're going to come back to it. Just keep this picture in your mind, and I'll show you how we got here. This is 2019. We're going to go back. This is all the way back to 2015, between the beginning of 2015 to 2016. Fed meeting, day 2, market went up. 2015, Fed meeting, day 2, market went up. 2015, still Fed meeting, day 2, market went up. Fed meeting, day 2, market went up. And I went, all right, we're on to something. This is going to be great. And we go from 2016 to 2017. And lo and behold, it went up. Once again, Fed day 2, gold went up. Same thing here. And here, we've got something going on, kids, right? All from 2015 into 2016, you can count on the gold going up. Same thing here. Second day of a Fed day, same here. And same here. So 2015 and 2016, gold went up on day 2 of the Fed day meetings. It's pretty interesting. Then we hit 2017, the end of 2017. We start rolling into 2018. And believe it or not, once again, it went up day 2 of the Fed meeting. 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 And here it started to get a little bit convoluted. It actually went down. Here we went up, so this one went down. Here we went up for the Fed meeting, and here the whole picture changes. Right in the middle, towards the end of 2017, we go down after the Fed Day 2. We go down. Here we just have a volatile day and do nothing. and here we actually went up. So things aren't as rosy at going into 2018. So then 2018 to 2019, what starts to happen is this. You just get extreme volatility and the market closes lower that day. Extreme volatility, the market closes lower. Almost every one of these bars shows you the same. You had extreme volatility, but you ended up closing lower. Extreme volatility or no volatility on this day. Here, the down day takes place. Here you had extreme volatility. So let me blow this up and show you what I'm pointing at. This is the exact same chart. I'm going to blow up the portion of the year of 2019. So here we are now, top day, and this is what it looks like. What we've noticed is you get a big bar on second day Fed day and then close near the lows all of 2019. A big bar, but then you ended up closing near the lows. A big rally up, but then you closed near the lows. Here, nice fat rally all the way up to here, and then you close by the lows. Here, we have a Fed day. We don't know what it should do. I say our approach will be this. The Omni is green. We're going to get long gold nice and early tonight if possible. When it rallies up, we are getting out of the trade knowing that the chances are good by the end of the day after the announcement, the gold will head towards the lower end of the session. Long, out, sidestep. This is all about being nimble. Just be nimble tomorrow, follow the Omni in, get long. When it rallies to a profit objective, get out and sidestep, because all of that analysis points to lately volatile day which settles by or near the lows. So that's what we should expect on Fed day tomorrow. Volatile day, and then eventually head towards the lows. So if you hang out with me, I'm not going to count on heading towards the lows. I'm going to count on a volatile day. And when it rallies up, we're going to take our profits and sidestep this bad boy. Join me at livewithoscar.com. And remember, if you like what you see in the chart segment, if you like what you see in these videos, subscribe, share, and like these videos. So, traders, you've seen the gold chart. You see the reactions around Fed Day. Now, it looked fantastic, 2015, 16, even into 17, right? You could buy it, it goes up, and then things changed. Now it just looks like volatile session. If you get long early and it runs up, you get out and sidestep. If you can't do this early, don't do it at all. If it goes up first before you get filled, then there's no trade. In other words, if you wanted to get filled down here in gold and expect it to rally up to a profit objective, if it gets to a profit objective first today, before you ever get filled, we're canceling our trade. If you want to know more about that, join me at livewithoscar.com in my live trading room. No credit cards are required. Just show up, fill out create a username, give me your email address, and we don't sell that to anybody. And just come on down and hang out with me in my trading room. And that's about that. Traders, I'll see you there, livewithoscar.com. Don't forget, keep your emotions out of trading. One of the best things you can do to help keep those emotions at bay, and I know it's not easy, but put your stops in first. Then say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll live with Oscar.com. I will see you there. Past performance is not indicative of future results. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.